Hey guys, welcome to Zillow Trade channel. From now on, I decided to slightly change the format of my educational videos. Telegram channels and educational videos are still managed by Mia, but I have handed over the storytelling to someone else to lighten my schedule a bit and focus more on trading and educating my partners. There will be more content and various analysis coming up. Enjoy your watch. Today, for the basis of our video, I want to take the topic of levels and channels on the charts. So we will be talking about their identification and usage in technical analysis. Let's start the video from the opening of today's position. I've already chosen the currency pair. It will be a British pound against the Japanese yen. First of all, I'm looking at the chart and I want to highlight the key trading channels. The main ones for us are the descending trend channel and the sideways range. After a period of growth to the maximum, there was a price pullback, forming a descending trend. Currently, the price is trending at the support level of the sideways range, and if we look at the indicators, we can clearly see the downward trend. Therefore, I expect a reversal from the level and move upward within the trend. So let's switch to the broker. I'll open in the position with a 5-minute expiration for a price increase. After the opening, I'll return to the trading view and I'll provide you with more detailed technical analysis, taking into account both current and past price movement. So let's take a look. In addition to the already mentioned channels, I'd like to turn to previous price movements and immediately note here another channel of sideways movement, but already in the context of global levels. So we can see that the upper trend is setting a local maximum. Volumes in general for this period were at the medium level. So this is a reversal level and a drop to the lower boundaries was followed. On the background of decreasing volumes, the trend movement slowed down and the price developed in a sideways trend. As soon as the support level was worked out, a trend of increasing volumes and lows started. As a result, in the uptrend, when the resistance level was worked out, sufficient accumulation of forces from the seller side formed the price development in the downtrend. According to RSI indicator, during this period the price went from overbought to underbought due to exhaustion. At this point, an impulse to the low with a breakout exit beyond the trend boundary is recorded. From oversold, look for an exit in further growth and establishment of an all-time high supported by strong volume saturation from buyers. Due to the weak range of sellers at the resistance level, there is only correction. But from the historical high, the channel of the oblique corridor with the previous attempt of sellers to restore the downtrend and went down. Now we are working with both from the resistance level in the oblique corridor and from the same level in the sideways. According to the indicator data, there is already a decrease in volumes and crossing of moving averages, so this serves as signal for price reversal upwards. We can consider the analysis complete, so let's move on to levels and channels, because they form the basis of any technical analysis. Levels and channels on charts are important concepts that help traders understand the current situation. To begin with, I will explain the concept of support and resistance levels. In general, this can be described as boundaries where an asset comes to a stop or change direction. They play a crucial role in chart analysis, allowing us to identify potential entry and exit points for trades. There are two main levels, support and resistance. Support level is a conditional price at which an asset trends to stop and begin to rise after decline. As traders, we can consider a support level as a possible point to open long positions. On the other hand, the resistance level can be seen as a potential point to open short positions. To identify these levels, you can use both historical price data and technical indicators. The method of using historical data is based on analyzing past price movements on the chart, and it's important to look for places where the price previously halted or changed direction. There are several key steps. Study the chart, observe the price movement over a specific period, and identify peaks and valleys. Determine the highest points, its peaks, and lowest points, its valleys, on the chart. These are the places where the price reached its maximum or minimum values. This will help you to determine support and resistance levels. And in the end, don't forget to verify these levels. The second method involves using indicators. The simplest one for beginners is the support and resistance indicator, but it often generates a lot of noise. So I recommend paying more attention to identify levels independently. However, in addition to this indicator, you can also use moving average, RSI and volume. Remember that we are looking for points on the chart where the price stopped or changed direction, and these indicators can help you easily identify them. So let's take a break and look at the broker. As you probably saw, I placed a covering position. There was remaining downward movement within the range, but it's already slowing down, so it was necessary to open a second position below this point. For a moment, guys, let's take a little break. And I'd like to remind you that I have a Telegram channels. Every day, I provide signals from my everyday trading sessions that benefit both of us, and share my statistics. So, if you want to improve your trading skills, I invite you to join the team. And for those who want more signals and additional trading content, I have a private community on Telegram. If you'd like to join, simply message me with Join Team using the link provided in the description. And now, guys, look at the chart. We close deal, take profit. It's time to move forward and open a second position on the Euro to Great British Pound currency pair. As with the previous chart, I've identified the main channel we are working with. This is a descending trend that replaces the previous uptrend. On the chart, it's important to know the global support and resistance levels. Based on them, it's clear that we can globally refer to a sideways range with the local microtrends. Currently, we have a descending trend, and from the resistance line, I expected the reversal to continue the downward trend. While the trend is weakening according to the indicators, it hasn't reached the lowest boundary yet. So we take this into consideration as the additional signal for entering the trade. Now, on the broker platform, we'll open a position with a 5-minute expiration for the continuation of the downward movement. But first, let's take a look at candlestick formation on the 1-minute time frame. So there we can see stronger upper shadows. So I anticipate a price decrease. Position is opened and we can return to the trading view for a detailed technical analysis. Let's go through the main working channels. First, when the price moves sideways, we should pay attention to certain price levels that act as a support and resistance levels. Typically, during this sideways phase, the price goes too high and becomes overvalued, which means buyers start to run out of the steam. When the price reaches the upper limit of this sideways pattern, the resistance level, sellers take control and the price starts to drop. During this drop, with strong activity, the price turns the recovery and returned to the sideways zone, especially during the London trading session, and buyers becomes dominant again. However, this strong buying doesn't last long, and sellers regain control, leading to another downward movement. This can result in the sideways pattern expanding with some smaller trends within it. On a repeated return to the resistance level on still strong volumes from the sellers, we can expect a subsequent reversal to fall in the trend from the resistance level. We can finally move to the trend lines and trend channels. A trend line is a conditional line on a chart that indicates the direction and slope of a trend. It can be ascending, descending, or horizontal. A trend channel is a tool that used to identify two parallel lines on a chart that limit price movement. Channels can be descending when the price moves downward between two lines, ascending when price moves upward between two lines, or horizontal when prices move sideways between two lines. Similar to levels, identifying channels helps find optimal entry points and the corresponding direction of movement. Knowing the basics is great, but how do we apply the knowledge? In essence, after identifying support and resistance levels, you can use them for corresponding trading strategies at these levels. When the price approaches a support level, it can be a good opportunity for buying. When the price approaches a resistance level, it can be a moment for selling. When you trade within trend channels, you can look for opportunities to open trades when the price approaches the upper or lower boundaries of the trend channel. If the price reaches the upper boundary of the channel, it can be a moment for selling, and if it reaches the lowest boundary of the channel, it can be a moment for buying. It's like in our case, we opened a trade for a downward movement, selling because the price had tested the upper boundary of the descending trend. In summary, we've learned how to define support and resistance levels, and most importantly, how to use them. Now we just need to wait for the position to close. In the meantime, I'd like to remind you once again about my closed community, about my closed Telegram channel, where I host daily trading sessions aimed at mutual profit and provide updates on happening in the trading world. I hope this video has been helpful for you, and if it was, don't forget to give it a like and subscribe to the channel so you won't miss the next videos and valuable content. Even now, if we look at the chart, we can see how accurate our analysis was. The price has moved downward from the upper boundary in the line with the descending trend. Now, all that's left is to wait for the position to close, and then we'll lock in our profit. And there it was. So guys, thank you for your time. See you.